What's up, everybody? It is Friday morning, September 15th. And guys, it's still a very tough time in the market. I just got back from an event in Nashville. Keith Collins, it was good seeing you a couple days ago. Thanks for making time for me, brother.
Absolutely, man. It was good to see you.
Yeah, no, really, really good to see you. And I did an interview last week with Jim Deutsch around what it was called Moneyball Mortgage. And he really did a great job of talking about one of the biggest challenges for lenders in this market. And this is also one of the biggest challenges for loan officers. It's a tough market, you know, every lead, every loan, every basis point matters more than ever. And it's time that both lenders, C-suite, starts playing Moneyball Mortgage, and it's time that mortgage professionals play the same game. And here's the deal. If you do what Keith and I are going to show you, one, as a loan officer, you will convert more of your leads into loans. And two, you will have less rate shopping. And when you do get rate shop, you're going to win more. Keith, anything you want to add to that before I go through a couple of the Moneyball slides and then we do a lesson on this?
No, I think it's important. I mean, this is definitely the toughest market I've ever been in. I've been doing this for 18 years, and it's something that's been echoed across probably every mortgage originator that I talk to that's been doing this for a while. And so we have to change it up a little bit, look at our processes. And I think the biggest thing for us that we've done recently is I heard this, it's resonated with me, and it's really kind of changed the way that we're doing this. You will not rise to the occasion. You will sink to your training. And I think right now, you know, you did an interview a couple of weeks ago, and some of the stuff I think recently posted, but he was talking kind of about Jocko and Navy SEALs and training. Navy SEALs spend 99% of their time training for the 1% that they're actually deployed. And then we look at the real estate and mortgage industry, and it's like totally flipped on this head, the opposite direction. Like we're out there just working rather than training. And so I think there's a lot of opportunity right now with some of the extra time that we have to relook at our systems, relook at the way that we do things, how we interact with our customers, what we say, scripting, right? Not being scripted, but being prepared and being ready. And because the conversations that we're having right now are a lot more difficult with clients, and we have to be a more skilled loan officer to be able to navigate those, to generate opportunities, because it's two things here, right? We're talking about profitability for the mortgage company, but like if you're not getting a loan, you're not closing a loan, which means you're not getting a paycheck either, right? So we need to be skilled in such a way that we're maintaining profit for the company so that we can do some really cool stuff, but we're also closing darn home loans, and we're not losing the opportunities that we already have in front of us because we're fighting for every deal.
No doubt. So I'm going to do a little lesson, a loan officer lesson on Moneyball Mortgage. You know, if you're a branch manager watching this, I mean, I recommend you have a sales meeting around this. Regionals, you know, this is a tool that will not only, you know, be strategic, but it will help give very specific skills that you and your loan officers should be training on. So first of all, here's the Moneyball Mortgage message that, you know, and this was done with Jim Deutsch. I'll put the link to the full 40-minute interview I did with Jim, but he goes into companies and he helps them look at their loan officers based off profitability. So, you know, this is anonymized, a specific client, but by the way, a very common, like this is indicative of the industry. So there'll be a tier of loan officers that are making the company $2,400 per loan in profit. Go ahead, Keith.
Bottom tier, I think when I first saw this, I think it's important to say bottom tier loan officers has nothing to do with production and the amount that you're doing of it, right? When this is not a production thing, this is a profitability thing, right? So when they say bottom tier loan officers, it's related to profitability, not production.
Correct. Yeah, it's just top tier, making money. He said usually in the middle tier, it's anywhere from making a couple hundred to losing a couple hundred. And in the bottom tier, he said like almost always losing 2x per loan versus the top tier. So guys, this is a problem. Like when you hear of, you know, mortgage companies going out of business or doing kind of surprising sales, this is the problem. And so, you know, and when I asked Jim, what is the number one difference between a top tier and a bottom tier? He said price concessions. The number one factor between being a top tier and a bottom tier. And then here's the deal, guys. The highest converting loan officers have, in most cases, the lowest price concessions. So a couple of things. One more point, there's two types of conversion. There's conversion in the funnel, like when an app started, and then there's conversion above the funnel. That's your database. And Jim and I both aligned that whatever the amount of loans are in the funnel, there's about 4x loans above the funnel. That's what our borrower intelligence does. We're going to focus on in the funnel conversion and concessions, but I just want to make the case. There's a lot of opportunity above the funnel. You're using Sales Boomerang, isn't that right, Keith?
Yeah, absolutely. Sales Boomerang and Mortgage Coach.
Yeah, and so that is a strategy to convert above the funnel. Now, when you break this down, it was pretty shocking to me, the cost of withdrawn loans. These are loans, mortgage professionals, that when you lock a loan and you lose it, very, very, very expensive. The gain on sale, the hedge losses. When you take an application and it never gets into a RESPA app, that's a lot of money. I mean, it all adds up. Like if you look at this conversion funnel, that it's costing companies 78 basis points. So we're really going to focus on three things. One, lenders lose a fortune above the funnel, and that's what this little lesson that Keith and I are going to go into. They lose 50% of their loans from credit report to RESPA app. So we're going to focus on that a little bit. Withdrawn loans are costing millions, and concessions have almost doubled for most lenders. Like, because I talk to C-suite all the time, and what was it last year versus what is it this year? It's 2 to 3x. One more key point, and then we're going to get into this lesson, is, we have this borrower intelligence platform that really drives this Moneyball mortgage algorithm. And the way we think of it is your conversion from credit report to closed loan, like that needs to be the number one metric, because one, as a loan officer, you make more money when you have a high conversion, and two, you deliver a better experience for the consumer. We're not going to focus on this in this class. Like I've already talked about it, conversion above the funnel matters, especially in this market. We are going to talk about concessions. And then when we think of playing Moneyball Mortgage, the bottom two metrics are how many loans did you close and what was your volume. And so, guys, this is like a flip of the script with how the industry thinks. Like everyone's dashboarding closed loans, volume, but this is the most important metric. So Keith, before we do the lesson and you teach how you're quoting rates, how you're delivering pre-approvals, Keith will share what he's doing, and then I'll pull in, hey, this is the science, this is what's happening. But anything else you want to say before you get started?
No, I think it's important. I mean, these are things that loan officers don't look at, and they actually may think that they're profitable when they're not. I do think it's important also that, and I pointed that out already, is that, you may be closing a lot of volume, but you may be making no money for your company. And that's where we're going to talk about bottom tier, top tier. We think about bottom tier loan officers as somebody who's closing, 1-2 loans a month, but that may not be the case. It may just be a non-profitable loan officer. You could be closing a ton of volume, but doing all kinds of subsidies because you're all over the place. Yeah, it's all got to change a little bit.
Cool. Well, let's get into, because by the way, Keith, you are, very successful.
Thanks,
and
man.
then your concessions are lower than a lot of your peers. Do you mind sharing, what you average in concessions historically and what you average in today's market, and then show us how you're doing that?
Yeah, absolutely. I mean, I think it's a whole process that we're doing from start to finish. So it's not just, we're going to just look at how are we quoting an interest rate, but I think it goes through the whole process. I mean, with digital applications today, it's so easy for a client to just complete a digital application and you go through it, and people do it. I mean, before having a conversation with a client, they'll complete the digital application to a point where I could approve them and quote them without having a conversation. And I think, maybe some loan officers are going and do that, but we don't pull credit until we have a discovery call with the client, right? So it's not just how we're quoting, but it's also how the clients are going through our process. Like we have a very specific process. It's extremely intentional to make sure that we're creating connection and adding value so that they realize that we're different. So when these conversations do come up, we already have that basis, that foundation that they know Keith's different, right? Keith asks some very deep questions. He knows about me personally. He's invested in me. The agent's involved in it, right? So when these other things start popping up, little speed bumps here, right? We've got a pretty good paved road when they get back on it. In terms of subsidies, So I've been doing this for 18 years. We've been using MortgageCoach for the last 4, and I just pulled back like when I started. So 1.2 basis points in subsidy in the last 4 years since using MortgageCoach across total loans. And it's not a little bit of loans. I mean, this market's different, but 2021, we closed 110 million for almost 300 families helped. 2022 was 140, 150. This year, we're at like 22 million. So 1.2 basis points in the last 4 years. It's higher year to date, 19 bips year to date. So we are getting shopped more. It's a more price sensitive market, especially with elevated interest rates. So it's a little bit higher.
So time out. I want to make sure everybody heard that. So historically, practically no exceptions, and then right now 19. And so
19.
for every, first of all, every loan officer, you should know that number. And the lower that number is, it's like a blood pressure for loan officers. It's your sales fitness score. Like if you have a low one, you're performing really well. You're delivering great value to consumers. Like they're perceiving what you do is highly valuable to them. Or you wouldn't have such a low number. And then again, the higher the number, the higher your blood pressure. So I just want to push every loan officer right now. 2 numbers you should know is, app to close loan conversion. You should know your conversion, like that's your North Star. And what is your, number of bips that you're costing in concessions? And then how does that compare to your organization? Like we're not going to get into, movements, what it is, but 19, I think is good. If you're a loan officer, like you're watching this, let us know. If you know your conversion, put it down below. And if you know your bips and price exceptions, put it down below. Those are like your vitals, heartbeat, blood pressure. Those are your vitals going forward if you want to play Moneyball Mortgage. So show us what you do. Like, how do you present rates? How do you, how do you deliver an experience so consumers less likely to shop?
I have the conversion stuff too. I'll just hit real quick because you've mentioned it a few times. So we're 72% lead to credit pull. So 72% of the leads that we get in, we pull credit on. 28% it's 28% lead to lock. So 28% of our leads we lock, and then we're 96% locked to funded. So we really don't have a lot of fallout in our system. We're pre-approving them correctly, but then they're not leaving us after we lock.
And I'm going to put a link down below. I interviewed Amber. Well, I didn't interview. For Scriptapalooza, Amber Kovarik did a script on how she locks loans. I'm actually going to do, hopefully I'm going to do an updated interview, but how you lock a loan matters, and when you lock a loan, it better be locked, or that's going to raise your blood pressure. That's going to raise your concession price. Yes. And it's definitely going to raise your CEO and your head of production's blood pressure. Right. All right. So walk us through the, I want to, Keith, I want you to think we're making a Kinko's direction, like how to, how, not Kinko's, IKEA. Yeah. Like if anybody's ever got furniture from IKEA and you built it, you get these directions. The rest is called, it's going to be like step 1, step 2, step 3, and hopefully we can keep it under 6 steps. So let's try to give the 6 steps to conversion, optimizing conversion and minimizing concessions. Let's go.
Okay. I mean, step 1 is great discovery call. So in that discovery call, we actually do a 15-minute discovery call with every client. We ask some really thought-provoking questions. And I think it's also important, when we ask a question, don't let them off the hook. If they tell you something, when you're active listening to the client and really paying attention, they'll answer the question that you asked. But often there's another question behind it. We really need to find the root of what's going on with them. So you ask a question, they answer it, you feel like you can just move on, but they didn't really answer the question often. So you need to dive a little bit deeper. The other thing that we do always is I tell clients I really think we have 3 jobs. The first one is to facilitate this home loan for you, get you pre-approved and get keys in your hands. Number 2, answer questions. And I try to make a joke out of it, but I don't have a job unless people have questions. So we're here to answer them. And then 3 is I think that, one of my biggest roles is to help you think about things you hadn't thought about before. And I may not have anything right now, but we're going to find stuff in the future. And the reason I point that out is when we have something where I'm trying to change their thought track, or I'm trying to show them something different, I relate back to that initial conversation and I'll say, hey guys, I'll send them a text message, hey guys, or an email, or, leave a message or whatever, is, I think I have something that we need to chat about, and maybe something you haven't thought about before. When do you have 15 minutes to go over it? I think we are often, especially in this market, because in the past, we were kind of like line cooks, right? And so it's just like, we're trying to be as efficient as possible. And I think right now we need to be a little bit more effective than efficient. And texting's got to stop, right? Like texting big stuff with customers is, you've got to get off that. We got to get on the phone. We have to share screens. We've got to go through and explain these things that we're doing so that we're kind of maintaining connection with the customer. So step one, go back, really good discovery call. They complete the application. Step two is we always send out the numbers, and I'll share screen here real quick on what we do. So we have an email that goes out, hey, you're pre-approved up to, I don't have that email. I probably should have had that.
It's okay.
It'll
No,
have
we
a
don't
link.
need to. And by the way, let's keep a couple things high level. So, I mean, I want everybody to write down there is an opening and a value proposition and how you frame yourself that is different. Loan officers with, let's just say bottom tier conversion and bottom tier concessions are not opening and framing and positioning themselves and asking the same questions is top tier. So, opening, framing, questions matter. And as we build out this playbook, I'll give some examples of what are great value props. So as we, one of the takeaways from this within a week or two is that we will literally have a very simple, 2 to 5 slide playbook. Like, guys, this is how to do it. And so stay tuned for that. And now I'm going to flip presenting. You had this opening, this value prop, these questions. Now, how you present what you heard to the consumer matters. So it looks like that's where you're going to go now, Keith.
Yeah, absolutely. So, we send out the email. It's basic information. There's always a link to the TCA. I think you always need to have video in it. So this is the video that we have embedded in here. So it's me addressing the client. And I'm kind of just doing a 500-foot flyover of what this is. But the goal is, I'm not trying to make the video be the only thing that they see here. I want to get back on the phone with them and do either a share screen or at least a conversation where we can take it over. I think the cool thing with this too is you can take over their screen. And that's probably one of my favorite features with MortgageCoach is if you send them a link, they're in it. And you go back into MortgageCoach, when you change things, highlight stuff, move the screen around, it actually changes their screen, whether they're on their cell phone or they're on their desktop. You can kind of take them on the process with you. And I think a lot of what we do today is I don't want to say showing off, but it's the presentation. It's like the process that he took us through was far different than somebody that just sent over a loan estimate, right? He went over the numbers, he took over the screen, he showed stuff, he answered questions, he made sure that we really understand what's going on. So embed video, I think, is super important. And then we're always going to show a couple of options. So this one here, first time home buyer. What's cool is, that's the other thing, and I'm just noticing this was sent out on the 13th for the client. They haven't watched it yet. So it shows views in the top right-hand corner. So I actually made a note. I need to call them because they haven't even looked at the numbers I sent to them yet.
Keith, by the way, technically, just so you're clear, that if they were looking at it now, it would say they're looking at it now. So the fact that that's 0 does not mean they haven't looked at it. You should have got an alert. So if you went into the advice engine, when they looked at it, you wouldn't have got an alert. But the fact that that's 0 does not mean
they haven't looked at it.
It just means they're not looking at it right now. And if 10 people were looking at it right now, it would show number 10.
Like how many people are actually looking at it at one point in time, not how many people are actually viewing it.
That is live views. We call that live. So that view is for how many live people are on this report right now. So like, let's say you used it for a realtor lunch and learn, or let's say you gave it to a husband, wife, and a realtor. You can always see the numbers up there. But by the way, Keith, if you could post this call, give us, make a copy out of this and then give it to us so I can make it part of the lesson. I'll put a link down below, and maybe, update the video and make it kind of like you're teaching loan officers how to put a video on a TCA. Is that something you could do within a day or so?
Yeah, I can get that done.
Okay, cool. Thanks.
Just do a full share screen, and go through it.
No, just do your little video, your MortgageCoach video. Just make a new TCA. I mean, this is a customer's TCA, so I don't want to necessarily, blow this up on social media. But use the copy feature and just redo this one, and we'll have a teaching TCA.
Okay. So do a quick video kind of explaining the numbers. We always like to show a few different options. We like to show no points and points. I'm not a huge fan of paying a lot of points right now because we do believe we'll have lower interest rate in the future. We just don't know when necessarily that's going to be. But a lot of lenders are quoting rates with points. So I believe it's important to show that to a client, have the conversation about what points are, and then make the decision that we're not doing points. So when they actually ask about an interest rate, you can reflect, hey, remember the initial conversation we have? That's a points rate. And based on kind of the conversation we had, you didn't want to pay additional fees to chase that rate. And it usually can kind of squash that when they go get online and see something about a lower interest rate. So we're going to show a few different options here. We're always going to highlight the big stuff, which I think is important. I let clients know this is kind of the 500-foot flyover. I don't know how in detail you want me to go here, but what's cool is it'll give a full payment breakdown: property taxes, homeowners insurance, total payment, HOA if you have it. It can give full closing costs and then full details on all the actual closing costs with a customer when you go through it. So it kind of allows them to digest the information in steps. Some people just want the high level stuff. Other engineers really want to dive deep, and I think they appreciate the information.
Yeah, no doubt. So stop sharing your screen real quick. So I want to, jump in. So everyone watching this, you just saw a loan officer that is, got less than 20 basis points year to date, averages historically, 1.5 basis points. Great. You heard his conversion numbers, incredible conversion. And I want to break down some of the things he's doing, and I want to just bring this home so that you get the lesson. So one, for my entire career in mortgage, speed to lead was the single most important thing when it came to conversion. And here's the deal. It still matters to show up fast and on time. It absolutely matters to follow up on your pre-approvals, but what matters most is speed to need. And speed to need includes, it includes being there on time, but it also includes making sure that you're addressing the needs of the consumer. And here's the deal. If you are a transactional loan officer that's like, here's your rate, here's your payment, here's your cash to close, you will not be optimizing your personal conversion, and you will definitely not be, optimizing your concessions. When you get grinded and this is the way you present, you're basically dancing. It's like my personality and my skills of negotiation and influence and a little bit of luck are what you're relying on. But when you do what Keith did, now this is a different version. I interviewed Jeremy Forcier, who happens to be one of the lowest price concession loan officers at a very large company with over 2,000 loan officers, and he also happens to be like doing over 140 million this year and has an incredible conversion, and he's delivering a transformational experience. Like he's showing, hey, here's a loan with 2 points, a loan with 1 point, a loan with 0 points, and then he's vision casting the future. By the way, this is different. This is a different TCA, but it was the same thing. It still followed this formula and this is exactly what Keith did. He showed options. And if you want to optimize conversion, you got to show options to consumers. You have to show the cost over time, which, by the way, this is extreme transparency and it's extreme personalization. Like when it comes to playing Moneyball Mortgage for executives, my message is show extreme transparency to your loan officers so they know what tier they're in. And then my message to loan officers, start doing extreme transparency to consumers and extreme transparency and extreme personalization. And that's the path. Also, you must show strategies to achieve financial freedom. Like, hey, if you paid an extra $100, how much faster can you pay off your mortgage? Hey, if you put that money in the bank. Or another strategy in this market is date the rate, marry the mortgage, or date the rate, marry the house. Like, show that, hey, look what's going to happen to rates in the future. So it's always options, costs over time, strategies. And right now, date the rate, marry the house is a great strategy. Any comments so far, Keith, before I show one more, call it teachable lesson?
Yeah, I think, unless you're building out your own spreadsheet, I don't really know any other program where it can show, cost over time. And I think that's a really important thing when we're looking at paying a point versus not paying points, or FHA versus conventional, or down payment assistance versus not. Like, how do you actually quickly identify or show a customer this is the right decision, the wrong decision based on how long you said you're going to be in the home? And like MortgageCoach does it in seconds. The other cool thing I think is it eliminates a lot of time. You know, when a client asks that, so you have your call with a customer and they're asking for things live while you're on the phone with them, you can just change it. Well, we're planning on being in the home in 8 years. We just change it to 8 years. Or we're only going to be in the home for 3 years. Then you just change it and live while they're on the phone and looking at the numbers, it completely changes it. I think the other thing on strategy is it's all built in there. You know, there's the ability to show them additional principal reduction, or saying, well, hey, what if you put 10% down and invested the other 10% at a 9% return? It'll show them their future net worth based on making that decision. And no online lender is going into that detail with the customer. They're just not.
Yeah, there's no doubt they're not. So the other lesson I want to teach, following the process that we just had, great opening, value prop, great questions, incredible presentation, you're still going to get shopped in this market. And this is pulling from a script that Jeremy taught in one of my interviews with Jeremy, that when someone tells him, oh, I can get that rate for 0.5% better, he's like, oh, that is awesome. Great to hear, like, be positive. Would you mind
acknowledge the objection? I think it's super important to acknowledge the objection. When someone brings that up, yes, thank you for bringing that to me. Like, the second you go on defensive and start fighting on them, they shut off.
And then he says, oh, that's great. Would you mind forwarding the total cost analysis with the video that they did for you? Silence.
Never.
Never.
Yeah.
They didn't give you full transparency? They didn't show the cost over time? Oh, okay. Well, what did they do? Oh, they emailed you? Oh, they gave you a fee worksheet? Okay, would you forward that over to me? Now, so by the way, he just calls, that's his jujitsu move. Oh, they didn't do it, and then he gets it. And then what we recommend, because now we're negotiating, with them, is we want to get off basis points. So according to Optimal Blue, the average, when there is a concession, 80 basis points alone. Like, that's expensive. 80 basis points is expensive. So you want to know how to have a smaller concession is you go from negotiating rates to dollars. So if you showed them that, hey, rates, or you've had the conversation, rates are going to come down, like, they know they're only likely going to have this loan for a year, no more than 2 years before they can refinance out of it. So we show them, hey, here's my strategy. Here's that credit union strategy. And in this particular case, it's like $2,000 a year, and by the way, extreme transparency, me versus them, that's $2,000 a year. And this is what I hear from loan officers that do this, is that if it's only $2,000 a year and you delivered a great experience, questions, value prop, advice, you've already got them approved, you're probably not going to lose them, and you're probably not going to need to do a concession. Now, if it's more than $2,000 a year, you're likely to have to do a concession, but now you're going to be negotiating with, if I, threw in $500, $1,000, something other than 80 basis points, something other than an eighth in rate, a quarter in rate, you're negotiating dollars. So what we also find, and we've had a lot of companies analyze this, is that mortgage coach loan officers have less concessions. And when they do have it, they're smaller concessions. So there's less of them and they're smaller. Now, one more lesson, when you're helping first-time home buyers, it's important, if you want to optimize their purchase price, that you're giving them clarity and confidence, and you're showing them the cost over time, and that you're also showing them, like, hey, look what this is going to mean to your net worth in 5 years. So when you're doing more than just, hey, here's your rate, here's your payment, which, by the way, rates suck, they're over 7%. Yeah. Net worth over time, based off of appreciation rates of real estate, that's great. So again, the key to reducing exceptions and optimizing conversion, all your first-time home buyers must get a rip versus own. When you do get shopped, any manager watching this, I would ask the loan officer, hey, did you do the competitive offer TCA? Like, if that loan officer has not put together our deal versus our competitive deal, and they have not had the proper conversation, I would tell them, hey, go back, like, put together the counter offer TCA, do a little script test, tell me how you're going to position it, get all your loan officers having this conversation. Well, you're going to see less exceptions and you're going to see smaller exceptions if you guys follow this sequence. So Keith, I've got a few more little nuggets, but anything you want to add before I share some closing thoughts?
No, I mean, I didn't show a rent versus own. I love that you did. I think that's really important. I think, loan officers jump into a rent versus own when they have objection, as opposed to putting it up front. If you have a first-time home buyer that's looking to purchase, why not put the rent in there? You're getting it on the application for the most part. You plug in that rent and show them the cost of time over time. It actually overcomes a lot of the objections up front. I think it's important not to rent shame. I think I see a lot of rent shaming happening right now. And so we do have to be very careful about that. But I think it's really important because to dive into that conversation, because clients don't take a look at the total amount of rent that they're going to pay over the next 5 years and how that relates to buying a home and net worth. So I think it's important.
Yeah. So, when Keith said it's important not to rent shame, I mean, it will never happen to you if you really work on your emotional IQ and your curiosity. Like instead of, selling, owning versus renting, be super curious as to, what their story is and what got them here. And then be real curious on, let's see what that looks like right now with a TCA. And if you come into that conversation with just extreme curiosity, knowing that emotional IQ is important, rent shaming won't happen. And by the way, those are some of the soft skills of, I always think of selling, there's an art and there's a science. And I'm going to go into just kind of summarizing everything, like science are the numbers. This is a case study that we have in FM lending. The 93 loan officers at NFM who use MortgageCoach, which by the way, it means they're doing total cost selling. They're showing options, they're showing strategies. One, they are 63 basis points less exceptions, and they have a 10% higher conversion. Guys, this is game changing. So there's data. This is a science of selling. Like when you show people options and you show cost over time, that triggers trust. Like, oh, this person has my best interest in mind. And then when you show strategies, that triggers respect. Like they're like, wow, no one's told me this before. Like this person is sharp. And when you have trust and authority, guys, you optimize conversion. So I want to make sure I got that in there. Lastly, I want to remind everybody above the funnel matters. So, if you're a loan officer and your database, you're getting no signals, not good. Make sure that you're getting what we call the bare minimum. I know Keith, you use Sales Boomerang and you're getting what we would call our basic data signals. I do want to remind folks, like we have built a new platform called the Borrower Intelligence Platform. If there's a CEO or a head of production and you want to get a demo on this, because we believe it's all about speed to need. One, you need more signals. You need to know when someone's likely to move up. You need to know there's a cash out refi. You need to know, hey, it looks like a first-time home buyer lives in this house. And then you need to get a message to them sooner. So one of the things that our Borrower Intelligence platform does is while it has total cost analysis, it also has simplified what we call data-driven creatives, where based on the data, we're sending an email or a text to engage. Hey, this looks like a first-time home buyer. Let's send an engaging message. Oh, this looks like a move down or a move up home buyer. Let's engage them. And then let's build out that total cost analysis so that, guys, we are dedicated to helping you play Moneyball Mortgage. So, hopefully every loan officer watching this, you're a little bit more mortgage, called the business of mortgage IQ is up. Like every loan officer I've told, and I've shown this, and I've shown it to some very elite professionals, they had a new level of empathy for their C-suite when they saw that, oh, look at the cost of these withdrawing loans, like millions.
It's just,
It helps healthier partnerships when you as a lender or when you as a loan officer know this, and then start playing Moneyball Mortgage by delivering an optimized experience. Any closing thoughts, Keith?
Yeah, one of the things that we changed up recently was Sales Boomerang, which I think was, the term game changer is overused, but it really has been for us. I think when I traditionally thought about Sales Boomerang and credit alerts, credit pull alerts, it was post closing, right? So my client is applying with another lender that that I closed a home loan for, but we're now adding our pre-approved customers in there. And so we'll get an alert if one of our pre-approved customers has an inquiry from another mortgage lender. And that for us was like, someone told me I could do that. And I was like, come on. So that's been huge for us, just getting that notification when they're shopping. The conversation's a bit different with the client in that case than when they're a post-close. And then like my final closing thought, I heard this the other day and it's really resonating with me. When things happen to you, they bounce off your standards. So when things happen to you, they bounce off your standards. Your standards show up before your attitude does. And so, I think about, there's so many things happening to loan officers right now. We're getting shopped. People are talking to their sister, brother, aunt, mother, and everybody's trying to get a better deal. And when we have standards that we put a process through, when those things show up, like I think the response that we have as an LO is much different. And we're able to navigate those things with customers because we have a higher level of standards. I think it's important.
Love that, Keith. And guys, if you want to know, if you're watching this and you don't have Mortgage Coach or our Bar Intelligence platform, one, you can go to our website, schedule a demo in the upper right-hand corner. If you want to know more about, I think most people know what Mortgage Coach is that watch this, and many of you and most know what Sales Boomerang is. If you want to know what a borrower intelligence platform is, just click this link and, we walk you through. But at the end of the day, we really believe that lenders need to transform their business, more transparency so that loan officers know what their conversion is in real time. Like and know both their above the funnel conversion and their in the funnel conversion. And the how we do that is technology, and it is, going beyond. When you think of what Mortgage Coach and a total cost analysis is, it's making it simpler and just making it better. So Keith, brother, you are always a gift. If you could forward that, call it that teachable TCA. Anyone watching this, down below in links, we're going to have Keith's total cost analysis. I'm also going to have a link to the Mortgage Coach 10X strategy. That's another thing. If you go to mortgagecoach.com, hang on, I want to pull this up because it's important and it's valuable. So 10X, little close on this. We'll have a link to this, and this has, a lot of the interviews that I've done. Keith, I'm going to add this to this training. So Keith will be on this within a couple days to a week. Also, there is a YouTube playlist. So all the long form content and all the micro content we're creating is here. That's awesome. And then there's a playbook, literally, we'll have a little bit of the, call it coaching notes from this call with Keith and a link to these TCAs. So, my goal is to help transform lenders so that they're optimizing conversion in both funnels, they're reducing concessions, and they're playing Moneyball Mortgage. So Keith, you the man, bro.
Thanks, brother. Appreciate you so much.
All right. Take care, everybody. This is a wrap. Hope you got value. Have a great weekend. Late.